Hello everyone, we'll be discussing risk management and the importance of risk management. Risk management is the most important thing while trading and investing in the financial markets. Managing risk is the top priority of every trader and investor in the financial markets. There is a famous quote by American financier and business tycoon. In trading and investing, it's not about how much you make, but how much you don't lose. It's a $1 billion quote by one of the legendary philanthropist and investor. So what is a risk management? I'll give you a question right now. Let's assume you're crossing a deep river and you don't know how to swim and you got two boats. Boat number A has life jacket and boat number B has no life jacket. I'll give you 5 seconds. What would be your choice? A or B? So, obviously, it would be A, the one with life jacket. So this is how risk management saves us when we face series of loss and drawdown in trading. Managing the risk is the most important thing in trading. This is the same as the boat which I have given you the example. When the boat sinks, the only thing which saves us is our life jacket. Same is the case with risk management. Now before going to the implementation phase, I would like to tell you how much you should risk per trade. Most traders and investors in the financial markets are comfortable risking 1 to 2% of the capital per trade. 1 to 2% risk per trade is the baseline to start with. I would recommend every trader to start with 1 to 2% risk per trade of the capital in the initial stages. Later on, when you are having consistent wins throughout the month, you should increase your risk slowly and gradually. 1 to 2% should be strict risk management in the start. I would not suggest to risk more than 1 to 2% during the start for an unexperienced trader. Even I have professional trader friends who only risk 1 to 2% per trade, and that's a sign of a professional trader. So I would encourage everyone to use 1 to 2% risk per trade of the capital. Managing risk removes all our stress from trading. Now, what is risk to reward ratio? A risk to reward ratio is commonly known as RR ratio. Here the RR reflects how much risk a trader is taking on a trade to reach a certain reward. I'll explain in the next page. Now let's implement the risk management. Let's assume we have a portfolio size of 6,000 US dollars. We are only risking 2% of our portfolio, which is $120. 2% of $6,000 is $120. And we are only taking trades with 3R per trade. I've explained this previously. R means risk to reward. Here we are risking $120 for $360 of profit. Expected profit if the take profit hits is $360. If we take a trade with 2% risk of this current portfolio with 3 risk to reward ratio, so our expected profit if our take profit hits is $360, and our expected loss if our stop loss gets hit would be $120. So let's say if we win 15 trades and lose 15 trades, our total loss would be $120 multiplied by 15 is equal to $1,800, and our total profit would be $360 multiplied by 15 is equal to $5,400. Hence, what do we have in the final outcome? $5,400 minus $1,800, $3,600. We are still in profits. So that's 60% gain of our portfolio, which is absolutely phenomenal. This is the power of low risk and high reward setups. Let me give you another example. So now let's suppose you're an average trader and you find difficult to find a 3R trades. Let's try with 2 to 1 risk to reward setups on the same amount. So what happens after 30 trades with 50% accuracy? Our portfolio size is the same of 6,000 US dollars. We would risk 2% of the portfolio, which is $120. Our expected profit if take profit hits would be $240, and our expected loss if our stop loss gets hit would be $120 US dollars. So after 30 trades with 50% accuracy, we won 15 trades and we lost 15 trades. So simple basic math. 15 multiplied by 240 equals to $3,600 and 15 multiplied by $120 equals to $1,800. So we would subtract these two, hence the final outcome for us would be 1800 US dollar. So we are still in the profits even after losing 15 trades, and we won 15 trades. So this is the power of risk management. Never go for the trades that have high risk and low rewards. We are here for trading. We are not here for gambling. Our main job as a professional trader is to manage risk. Always risk 1 to 2% of the portfolio per trade in the beginning. Consistency and patience is the key to success, guys. Avoid all these social media and Instagram gurus who are showing you a fake persona of trading. All these social media gurus have planted a desire of get rich quick scheme in your mind. There is no such thing in trading. Everything is fake. Trading is a career which is based upon patience, disciplines, persistence, and consistency. These things are the key to success. There is no point of drawing fancy lines on the chart unless you have money to trade. So that is why risk management is the key to success. I have seen a lot of newbie traders who have blown and wiped out their trading accounts within the first couple of days because lack of risk management and not taking good trades like low risk and high reward setups. In this video, I have given you the example of 3 to 1 risk to reward ratio and 2 to 1. Now imagine if you take trades with 1 to 1 risk to reward ratio. By winning 15 trades and losing 15 trades, you would make no money. All of your time and efforts would be wasted and you would be in some deduction due to the exchange and trading fees. So that is why always go for low risk and high reward setups. I hope this video was full of information and you have completely understood and understand the risk. I hope this video was full of information. You have completely understood and understand how I hope you I hope this video was full of information and you have completely understood how to manage risk and act as a professional trader and what to do and what not to do during your trading journey. I hope you have enjoyed the video and you have learned. Thank you everyone. Let's move on to our next lecture.